Hey, what's up guys? Dan Trevidi here. I hope you're all well. So I'm doing this video all about how to get into buy-to-let in a very basic way. And one of the main reasons I'm doing this is because I had a chat with a friend of mine about a week ago, really successful, lovely guy. And we got chatting and he just didn't know and didn't understand how you get into buy-to-let investing and where do you start, what do you look for. So in this video I'm going to go into what I think are the most important stages, the most important things to look at, some of the things that you should definitely do, and also some of the things you should absolutely avoid doing. As ever, if you can do me a huge favor and smash the like button, and don't forget to hit subscribe and the little bell icon next to it. So if you're watching this video and you are a buy-to-let investor already, or you're already well on your way to building a massive portfolio, or even moving into some developments and conversions and all of those various things, and you've expanded the type of tenant that you're renting to, so anything from single lets to HMOs to students to serviced accommodation through to commercial. Some of the stuff that I'm going to talk about is going to resonate with you because it's a lot of the stuff that we thought about when we got going and when we got started and now becomes second nature. It's a little bit like when you first learn to drive and everything seems like there's so much to consider, and when do you do this and how do you do that and how do you know when to change gear and all these various things. But after you pass your tests and you start driving for a few years, it becomes second nature. And you kind of forget the very basic principles of driving. And it's not because you don't know how to do them, it's because you've done them so much, they become second nature. Now, to anyone starting in property, and especially looking to start investing their cash, their hard-earned money into the buy-to-let market, it's no different. Everything looks like it's got huge amount of thought process going into it. You need to know the ins and outs of how something works, and how do you remember what to do and when to do it, just like driving a car. And the honest answer is in property, it's always really, especially when you get started, a kind of a ready, fire and then aim, but not in a scattered gun approach, and definitely not when you are picking things like the market, the type of property, the location, and the condition of the property. So even though it is definitely not a one size fits all, and there definitely isn't a step-by-step process or guidebook that you can read and follow like you would when studying for an exam when you were back at school, it just is never going to work like that, because property has so many shifting and moving parts, and it has so many outside influences that can rumble and change exactly what you're doing with that type of property and its performance. Things like legislation, things like market conditions, things like economic downturns and pandemics. But look, it's going to be a short video, quite punchy, very to the point, on where you should start to look to invest your money when looking to get started in buy-to-let investing. So let's paint a picture. You've got a pile of cash, you're a hugely successful career person, you've got your own business or whatever it may be, and you want to make that money go a little bit further for you. And you've looked at things like stocks, Forex trading, ISAs, and the reality is the performance of property over time has always outperformed any other sector when it comes to investing your cash. Now, I'm not saying quick turns and quick cash is easy in property, and if you time the market wrong, you may see a slight loss short term. But over time, property has definitely delivered a proven sustainable level of growth in both rental income and capital appreciation. So we understand that we're all here because property, we believe, is the best place to put our funds. Now, you may think the first thing that I'm going to talk about is the type of property that you're going to go for, or the condition it's in, or the location you should buy in, or what type of lending you should go for, and how much of your pot of cash should you invest in a single project, and should you make your pot of cash go further. And they're all very valid points, but they're actually all really mood points, because the very first thing that you should always consider when you're buying a property Bearing in mind, you've come over the fact of all the risks of putting your money into a property and potentially losing it, or not getting the return that you want, or having an ongoing cost of, say, a mortgage, and you're able to sustain that. So once you've overcome all of those things, the first thing when you're considering a property is what market you are looking to target. And the market is so important. It is by far the most important thing you have to consider. And through years of investing, I didn't realize that the reason I started to become successful is because I started to understand the market I wanted to play in better. And it was only after years of success that I realized the reason why we were so successful is because we understood the market so well, and we understood it probably better than anyone else, that we were able to influence the market and start to fragment it and build on the areas of growth and exit the areas of decline. And when you understand a market in that amount of depth, you can really start to capitalize on it. So the market, and this terminology, this word has so many different branches coming out of it. It is everything from the end user, the end tenant that you're going to be renting to, everything to the person that you want to sell to, everything to the secondary market you want to rent to, everything from the secondary market you could potentially sell to. What happens if both those markets die? What can you do about it? And then also everything that can change in the market, and it could affect the type of property that you're looking to buy to target that end user. So things like location, whereabouts is it? How easy is it for you to access that property? What happens when something goes wrong and you need to be there quite quickly, or you need to call on favors, or you need to call in trusted tradespeople? And what is going on in that market? Is that market seeing a huge amount of boom? Has the 5-year land supply not been written? So outside of development boundary developments probably are going to come up in mass numbers, which could affect the saleability of that price. What's happening in the local market in terms of the local economy? Is there large factories, large offices, which are hugely influencing the amount of people coming to that market and buying new properties or renting properties? And is that going to be impacted in the short term and long term, both positive and negatives? Are you in a city centre that was a retail hub, which now retail is going to see a huge amount of decline? And therefore, city centre apartments, which are retail driven, are they now going to start to see a decline? Do you want to target properties out in the countryside, but with a good commuter distance to the local town or village? All of these things have to be considered. Now, I'm not saying that before you buy your first property, you have to go and get a degree in property marketing. That's absolutely not what I'm talking about. I'm talking about the unsexy side of property, doing your due diligence, lots of reading, lots of exploring and investigating, understanding your local area and all the different fundamental things that could go wrong and that could go well for you. And when you start to understand what's going on, start to network, start to talk to other property people investing in your location, but maybe in different markets, if not the same. And you'll start to really get an idea of what people are focusing on and what they're not focusing on. And it may give you an idea of what to spend your time on and where to potentially park your cash. Or it may give you an idea that there is an opening or a gap in the market, because you've seen so many different levels of different types of things that could happen to that market that you've actually spotted a gap. And this is where true success and property investing steps in, and how you can make things work a lot quicker for you if you spot a gap in the market and it's viable long term. And then, so underlining all of that is all of the national stuff that can affect the market. So what happens if a chancellor comes in and increases stamp duty or increases interest rate relief? What happens if we go into a pandemic and effectively the economy closes down? What would happen in all of these different scenarios? Now, I'm not saying you can plan for every fundamental situation, but what I will say is if you look at history, you can start to get a great idea of how resilient a market can be. If we're looking at something like serviced accommodation, that's really never had a test until the pandemic, and it's been a big test for those guys that play in that market. It's definitely going to survive, and it could come out fighting far bigger and better than it ever was, because now the shift in the attitude towards staying local is definitely coming about. So we may see a different part of that market emerge, of more high-end but more family focused, to suit the needs of families in the UK who want to have a holiday within the UK. I don't know, it's not a market that I focus on too much, but I definitely keep my ears to the ground on it, because like I say, markets shift and change all of the time. And if you can spot a gap, or you can spot a shift where there's an opportunity, that's where an entrepreneurial property investor can make money. On the flip side, look at something like the student market. The student market has been growing for years, maybe even decades. And the biggest test for the student market, other than the pandemic, because that has been a huge test, was when the tuition fees tripled overnight. We all thought that there was going to be a massive shift in the desirability for people leaving their college or their sixth forms to go to university, given the amount of cultural shift of going to university was the right way to do things if you wanted to be successful. Now, apprenticeships and leaving school to start businesses, just as desirable and just as socially accepted. However, there was no shift, there was no downturn. If anything, it's continued to climb upwards. And then what we have seen is, even though tuition fees increased, we saw grants and student loans increase with it. And then attitude changed towards accommodation. No longer was it accepted to be in a cold, damp, 3-bedroom, 1900s Victorian terrace with single glazed window, no central heating, and a curtain dividing bedrooms. That just isn't going to cut it anymore. You're now competing and given quality accommodation versus massive pension funds who are building bespoke, big, purpose-built student blocks, which outperform anything built on site in a student campus. And to give you a comparison, you're now looking at finishes towards hotel finishes, hotel specifications, tiles, bathrooms, wall finishes, bedroom furniture, carpet. That's the sort of market that is emerging from what was a basic student market of get a house close to the campus and stick as many kids in as you can and let it carry on. That has definitely moved on, and rightly so. And I think once you understand the market and everything that you think that you can look at and potentially investigate, and you will never know everything and you will never know what's going to happen in the future. All you can do is set yourself up for the best success that you can ever do. But after you've done that, you will have a pretty good idea of what location, what type of property, and what type of tenant or what type of person you want to sell your property to. And then once you understand that, the next thing for me is really managing your risk profile, because it doesn't really matter what type of property you pick next. If your risk profile on the scale of say 1 to 10, 1 being really low risk, 10 being really high risk, is like 1, then you don't want to be using all of your cash to have everything out in deals and then you can't sleep at night because you don't have a cash buffer. And equally, if you want to take some risks and you want to take and maximize your return and you're happy with those risks, then there's no point invested in low risk, low return and really easy investments that just sort of vanilla, which are just sort of vanilla investments and sit there ticking along and don't really have a huge impact financially. If you want to have something a bit exciting, you want a challenge, you want to go in and step up straight away into planning gains and HMOs and those sorts of things, don't let anyone tell you can't do it. I wouldn't advise it, but it's up to you. It's your cash, it's your risk profile. And at the end of the day, if you want to have a bit of excitement and get straight into it, and that's going to be what investing is about for you, then absolutely, that's your call. But understand where you want to be in terms of your risk profile. The worst thing you can do is step into property, start investing and start worrying about it and start losing sleep, because that's definitely not what property investing should be. It should be something that you do that keeps you content and keeps you comfortable. And if anything ever makes you feel uneasy or unsure, or you don't want to, or you think you shouldn't do it, my advice is to always walk away in anything, because there's not many guarantees in properties, but there will be always another deal, and I can pretty much guarantee that. And then I think to finish on, because I'm not going to go into all the different stages, I've got multiple videos that talks about different stages of investing, but once you understand all of those things, you can then start to walk through some doors and start to understand the type of properties that you want to be buying. And you don't need to be a builder, you don't need to have any building experience to understand what you need to do to property. What you need to be good at is building relationships with people who do understand that. So when you go and walk through a potential door, and you might have to kiss some frogs before your prince or princess pops up, but you will have to spend that time in the early stages. And even though you'll walk through 10 doors and you don't buy any of those properties, each one has been so valuable in what you've heard, learned and seen. And it will always help you for the next property that you're going to look at, and eventually the one that you decide to buy. And then really simply, when you want to buy something, effectively you need to put an investment into the deposit, the stamp duty, the legal fees, and the refurbishment costs. And to understand all of those, you can use spreadsheets, you can use online calculators. I've got a Grace Charles app which has most of these calculators in. I'll leave a link in the comments below. It's free to download and free to use. If you're really unsure, don't go and seek loads of training, read some books, they're free. And my advice is to have a conversation with an accountant and a broker. And between an accountant and a broker, and maybe a lawyer, you'll be able to understand exactly what you can and can't do, and what you should and shouldn't do. But getting a buy-to-let mortgage where you put 25 or 35% deposit down, the lender will lend the rest. You can pretty much buy any property that you think will fit in all of your market and all of your risk profile. And whether that's a single house to rent to a family, a house to rent as a HMO to professionals, to students, serviced accommodation, or commercial property, it's entirely up to you. It's entirely what the research has given you from your market and how much cash you've got. Because if you've got 100,000 to play with and you're researching properties at 2 or 3 million quid, you're not going to be able to jump straight into that level of purchase prices. But really, that's it from me. Really, emphasis on the market, I believe, it is the most important factor in anything you should consider when looking at a property deal, and understanding all the different fundamentals that you possibly can at that time is absolutely key. That's it from me, guys. Hope you found the content rich. I'll catch you all on the next video.